Hello and welcome to Simplicity in Stocks. In this video, we will look at 4 fundamentally strong blue chip stocks that have fallen significantly from their 52-week highs. These are among India's most reliable blue chip stocks. Please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. The first stock is Trent. At the time of recording, Trent's stock price is about 35% below its 52-week high. The company's future, on the other hand, looks bright. Trent is engaged in retailing of apparel, footwear, accessories, toys, games, food, grocery, and non-food products through various retail formats and concepts. A young population, urbanization, and a digital proliferation drive will fuel consumption in India. The fashion and lifestyle market is poised to grow at 10 to 12% CAGR to about 18 trillion rupees by the year 2028. Trent is also expanding its business in categories like beauty, innerwear, footwear, which have delivered a 5-year sales CAGR of 149%, 92%, and 73% respectively. Premiumization is also emerging in the food and grocery segment, with consumers willing to pay for convenience, quality, and wellness attributes. Consumers prioritize value, convenience, and experience, and this favors brands like Trent. Coming to its financials, the company's revenue has grown at a CAGR of 37.9% over the last 5 years, while its net profit has grown at a CAGR of 70.7%. The 5-year average return on equity is 16.2% and the return on capital employed is 27.3%. In FY25, the company reported revenue of 171.3 billion, up 38.5%, net profit of 15.3 billion, up 3.9%, and a net profit margin of 8.9%. The second stock is IRCTC. At the time of recording, IRCTC's stock price is about 26% below its 52-week high. It's a mini Ratna company and the only one authorized by the Indian government to provide online railway tickets, catering services, and packaged drinking water at railway stations and trains across India. The company is leveraging on the government's focus on tourism and is highly optimistic about growth, particularly in tourism and non-railway revenue streams. Coming to the financials, the company's revenue has grown at a CAGR of 18% over the last 5 years, while the net profit has grown at a CAGR of 29.2%. The 5-year ROE is 32.4% and the 5-year average ROCE is 44.9%. In FY25, the company reported a revenue of 46.7 billion rupees, up 9.7%, net profit of 13.1 billion rupees, up 18.3%, an EBITDA margin of 33.1%, and a net profit margin of 14.9%. The third stock is Infosys. At the time of recording, Infosys stock price is about 21% below its 52-week high. Infosys is India's second largest IT company, just behind TCS. The company's deal pipeline remains solid, but mega deals have reduced and tend to have longer gestation and ramp-up periods. The negatives impacting the company are global trade tensions with the US, delayed and elongated decision cycles by clients, and geopolitical worries. The guidance from the management is conservative and reflects this uncertain environment, but the company is confident in its ability to navigate both growth and cost-driven client agendas. Coming to the financials, the company's revenue has grown at a CAGR of 12.4% in the last 5 years, while the net profit has grown at a CAGR of 10%. The 5-year average ROE is 29.2% and the 5-year average ROCE is 40.6%. In FY25, the company reported revenue of 163 billion rupees, up 6.5%, net profit of 267.5 billion rupees, up 1.9%, with a net profit margin of 16.4%. The fourth stock is L&T, Larsen & Toubro. At the time of recording, L&T stock price is about 12.5% below its 52-week high. The company's management has been cautiously optimistic recently, balancing strong growth prospects with external uncertainties. L&T's order book stands at rupees 5,791 billion, up 22% year on year, which provides a multi-year revenue visibility. The company is investing in future growth areas like green energy, semiconductors, and data centers to drive long-term shareholder returns. The management has given a revenue guidance of 15% and an order inflow guidance of 10% for FY26. Coming to the financials, the company's revenue has grown at a CAGR of 12% over the last 5 years, while its net profit has grown at a CAGR of 11.7%. The 5-year average ROE is 13.9% and the 5-year average ROC is 18.2%. In FY25, the company reported revenue of Rs 2,557.34 billion, up 15.7%, a net profit of 176.7 billion, up 13.7%, with a net profit margin of 6.9%. Conclusion: while market sentiment may be short-lived, business fundamentals are built over decades. Blue chip stocks may not offer any overnight gains, but they have the potential for long-term wealth creation. A beaten down blue chip stock may remain under pressure if, for example, FIIs keep selling or if investor sentiment remains negative. This can happen despite strong fundamentals. However, it's only a matter of time before fundamentally strong blue chip stocks reward patient long-term investors. Happy investing.